I just want to kind of preface this, this is going to be casual. We're an open community, so if you ever want to raise your hand and hop on stage, feel free. You're absolutely welcome to. How today is going to go, the main agenda is going to be brief intros. I'll intro the project and myself, and the team members can do an introduction. We'll give a brief update as to some of the progress that we've made in the last week since the last AMA. And then we'll wrap it up with community questions. So we'll go through the AMA section in Discord, and then any additional live questions we're here to answer and just to hang out. So without further ado, I'll start on the intros. So for anyone who's new here, Sperax is a software development company, and we've built a decentralized stablecoin that automatically yield farms for you, and it'll grow in value without having to do anything besides holding it. So without staking or claiming, you can actually capture high interest in the form of stablecoins without having to be a DeFi expert. So it's really an exciting product that's designed to allow for more people to capture the benefits in DeFi. And more technically, USDs is the stablecoin, and it's a dual token system. So we have the stablecoin, but we also have a governance token called SPA. So the SPA token actually plays a key role in keeping the stablecoin pegged to $1, but it also allows users to vote on changes or upgrades to the protocol. So it's a governance token, you get voting power when you hold it. But the hidden kind of cool benefit is that it also is the value accrual token. So as USDS grows in supply, the supply of the governance token SPA will actually decrease. So we can't tell, what that's going to do to price guaranteed, but we do know as USDS grows in adoption, it will cause a decreasing circulating supply of the governance token. So that's just a very important mechanism to understand. And that's the main project. Since the last AMA, we've had some pretty serious progress. So let me give a brief intro to that. So we broke 20 million USDS circulating, which is super exciting. We now have $19 million of TVL that is owned by the protocol, that is deployed into various DeFi applications, earning yield. And this growth thus far has actually caused the net SPA burn of over 8 million tokens. So that means 1.5% of the whole circulating supply of SPA has already been burned thanks to the USDS growth. Also, since last week, we've had 2 new centralized exchange listings. So we got listed on Coin1, and we also got listed on DigiFinex. Coin1 is the largest Korean exchange, so we're super excited about that. And DigiFinex should drive significant volume as well. And our most popular yield farm, which is the Saddle stablecoin farm, just hit $30 million in TVL. So we're very proud of the recent success. And most importantly, on Friday, we announced the veSPA token. So this is a new opportunity for users to stake SPA and to get really exciting benefits. So that will be the focus of today's conversation. And, we'll talk. I'll pass it off to Nico in a second, but let's just do intros again too, so you get who the heck is talking here. So I'm Alec. I'm a partner of business development here. I focus a lot on use cases and adoption of the stablecoin. So maybe everyone here can give a brief intro, any update that I might have missed, and then we'll pass it off to Nico to introduce veSPA. So maybe we can start with Ray.
Thanks, Alec. I'm Ray. I'm the CTO of Sperax. Come with 25 years of experience. Actually, more than that, but I capped. Yeah, my apologies. My internet went out, so I rejoined really quickly. I'll be brief. We're constantly looking to build more products, more solutions. We're and we're super excited. So that's a little bit about me. Back to you, Yash.
Maybe Yash, would you give yourself a brief introduction?
Hey, yeah, sure. So hi everyone, this is Yash this side, and I'm working as a smart contract developer at Sperax. I have been in blockchain ecospace for past 2.5 years, and yep. This is something that excites me, and I am right now working on the veSPA module.
Yeah. So when it comes to me, I joined Sperax a bit more than a year ago. I have been working at designing USDs, the hybrid stablecoin of Sperax. And before joining Sperax, I was a researcher at Terra, where I helped them design the stability mechanism as well as the first two DApps, Mirror and Anchor.
Cool. Thanks, everyone. Was there any updates that we should address prior to jumping into community questions?
I think you did a pretty good job covering the key developments from last week. Like as you mentioned, we replenished the budget on the saddle farm, and we also had two big centralized exchange listings. I think that captures most of the updates from last week. We can move forward discussing the V model, I think.
Yeah, beautiful. So maybe Nico, could you introduce it and maybe highlight some of the key benefits from a user perspective?
For sure. So the key value proposition of the V model is actually rather simple. It's a model that requires user to lock away part of the circulating supply in return of various different rewards. So effectively, the goal of the V model is to remove SPA from the circulating supply, lock them for a long enough period of time, and in return, offer various different benefits on the users, on the holders of those locked SPA. So the model is actually pretty simple. You take your SPA and you lock them. The longer you lock them, the more benefits you get. So if you have 100 SPA and you lock them for a longer period of time, you get more benefits than if you have 100 SPA and lock them for a shorter period of time. And the benefits you get depend on your share of veSPA holdings. So like how many veSPA you own out of all the veSPA that exist out there. What benefits now are we talking about? So let's talk about monetary benefits first of all. So users, holders of veSPA tokens will be receiving new emissions of SPA tokens from the treasury. This is our way to decentralize SPA holdings and also boost staking yield in the early days. So effectively, new emissions from the treasury will go directly to SPA stakers proportional to their share of veSPA holdings. Then the two other benefits are also pretty interesting because they increase yield while also being non-dilutive. Specifically, the first source of funding comes from all the minting and redeeming fees from USDs. So as more USDs are being minted or redeemed, part of that value is being captured in terms of fees, and these fees will be used to buy back SPA from the open market. So effectively, as the USDS supply changes, all these fees act as a constant buying pressure of SPA from the open market. And this SPA will be given back to the stakers in the form of staking rewards. So more USDs are being minted, a cut is generated in the form of fees, and those fees are being used to buy back SPA. Thirdly, we are going to be introducing a profit sharing agreement between USDS holders and SPA stakers. What does that mean? As Alec mentioned, the yield the collateral that backs USDS has been deployed on DeFi applications to generate yield like Curve. So part of that yield will go directly to SPA stakers. Specifically, part of that yield will be used to buy back SPA from the open market, and then all this newly purchased SPA will flow back to the veSPA stakers. That's extremely interesting because as TVL grows, as we have more and more collateral, we generate more and more yield. So even if USDS no longer grows over time, if we have a high enough level of TVL, this feature ensures that it's going to be a constant buying pressure of SPA from the protocol. Because as yield is being generated, this yield will get swapped for SPA in the open market, which eventually, all else equal, should cause some positive price action. So when it comes to monetary incentives, these three are the main forms that we're going to reward SPA stakers. So just to do a quick summary, the first form of incentives is going to be new emissions from the treasury. The second form is going to be USDs minting and redeeming fees that will be used to buy back SPA from the open market, and those SPA will be given to stakers. Thirdly, part of the yield generated from the collateral will be used to buy back SPA from the open market and reward those SPA to the stakers. Now, on top of those monetary incentives, there are some other really interesting features that the veSPA model will introduce. First of all, veSPA holders will be able to vote on which collateral is acceptable for USDs, as well as how that collateral can be deployed to generate yield. So, for instance, a question that many people from the community have said multiple times is that they would like us to have more decentralized collateral, which is something I fully agree. So with a simple governance proposal, we will be able to add, let's say, decentralized tables like Frax or USD as collateral. Or we will be able to change the way we deploy our current collateral. We could deploy collateral, let's say, not just on Curve, but also on Aave, or maybe on Anchor. So effectively, the collateral composition, as well as the collateral deployment strategy, will be governed 100% by the veSPA holders. So that's, in my view, one of the most interesting features that this model will introduce. It's going to be effectively a truly decentralized money market, where veSPA holders will be able to decide what strategy the collateral should go after. I think. Oh, and the final feature I forgot to mention is that veSPA holders will be able to also control new SPA emissions as well. So they will be able to vote which pools are going to get incentivized, or which protocols are going to get incentivized, in a similar way like the Curve protocol works right now. So effectively, people who want protocols that want to receive SPA incentives will have to hold a lot of veSPA to be able to determine that. So veSPA holders will be in control of all future inflation of the protocol. I think that's a quick summary. Happy to go into more details later during our discussion.
Yeah, thank you so much. That was incredibly helpful. And that was a lot of information. So any community member, as I mentioned before, feel free to raise your hand and ask a question live, or drop your questions in the AMA channel. So if there aren't any immediate questions, we'll transition over to the AMA channel, and I will. And I'll start reading those questions off. All right. Hey, there's a lot of them. Good. Okay, so the first question is, did you only set a single regional target when creating your marketing strategy? Are there plans to expand globally? For example, national Telegram channels, Airdrop, etc. Yeah, this is a great question. I'll take this one really fast. So we are a globally accessible protocol. We are not limiting or blocking users. We're an on-chain, decentralized, censorship-resistant protocol. So naturally, we are global, just by nature of our design decisions. And our marketing hasn't really been targeting specific users as of now. When I mean... So as of now, we've been targeting specifically crypto native kind of degen type profiles. But as we transition to more of a generalized marketing campaign, it's going to look a lot more like a global generic marketing push. Less so talking about yield farms, and more so talking about the amazing benefits of a high interest stablecoin. So once we transition fully to the more generalized marketing, which is beginning now, we'll have things like different languages for Telegram channels and do more generalized marketing pushes. So yeah, we are a global company, and we will be rolling out those other languages. If you have ideas, please drop them in the Discord. We already began doing some translations there. Okay, next question is veSPA staking. Is it an indefinite pledge? And then what might the benefits be for locking either shorter duration or longer duration? I'll pose this to anyone on stage.
when it comes to the benefits, I think I gave a brief summary. So there are going to be a couple of different monetary benefits that relate to USDS growth and adoption. So if you want to capture revenue generated by USDS, the only way to do it would be by staking your SPA and getting veSPA tokens. And also there are the governance token of the protocol, which means that veSPA holders will determine the collateral composition, the collateral deployment strategy, as well as all future inflation and the protocol parameters. So yeah, I think that gives a pretty good overview of the benefits. The longer you stake it, the more benefits you get. The norm within the space is to have a 4-year max staking period. We received some feedback from the community that this might be a bit too much for the average user. So we're still finalizing that. But yeah, I think the expectation is that the maximum duration should be at about 4 years. Maybe we will end up having a slightly shorter max period, but yeah.
Cool. Just to add on to what Nico said there, Alec. So there's two options. One is you can lock it for a specific period and then just it expires at the end of that, or you can have it as an auto lock. So when it expires, and if you forget about it, it'll continue compounding and it'll just renew the lock every 7 days.
That's super helpful. So it's not going to say relock me for a year or two, right? It'll just kind of give me this rolling 7-day benefit where I get auto compounding, but I'm not locked in for a super long time.
Exactly, yeah. And so the cooldown period is 7 days anyways. So you'll auto lock so that for 7 days, so that way you continue to auto compound. You don't have to do anything manually. So you don't have to remember, oh, in 4 years I have to relock it, or in 2 years I have to relock it so that I continue to earn those rewards. It'll automatically continue to do that for you. And then the cooldown period is 7 days. So the moment you decide, hey, I don't want to continue this, then you just unlock it, and you get a cooldown period of 7 days, and then it's available after that.
Beautiful. Thank you for clarifying. Next question. So GGG, he has locked all of his SPA in various farms. Will he get veSPA afterward, or does he have to do some additional action?
So when veSPA is released, people will need to have some disposable SPA to be able to stake them. The expectation, though, is that that veSPA would be released a bit before the first farms expire. So by the time people will be getting back their SPA from the earlier farms, they will be able to invest them directly into the veSPA staking contract. But yeah, if you have an LP token, let's say, then you cannot stake the LP token. You need to hold SPA tokens to be able to stake them. So users will have to have some disposable SPA tokens to participate in the veSPA model.
Got it. So it's all single-sided, right?
Correct. And you need to have the actual token. So a derivative of the token, like an LP token, will not work.
Sure. Okay. Thank you. Next question from Nikki Tackle. So what pools will veSPA, or which pools are waiting for us? And then, will there be higher APR or APY for risky pools? I can answer the second one. If we're going to be having a very volatile pool, the assumption will be a higher APY in order to compensate for permanent loss risk. And then when it comes to, what pools specifically will be paying yield in veSPA, I believe, most pools moving forward will allow for users to accept their rewards in veSPA if they're a veSPA staker. But maybe we could shed a little bit of light as to, how yield farming relates to veSPA as a user who's considering staking their SPA. Do they get better APR? How do they collect their rewards? Are the rewards in veSPA or SPA? Maybe we could talk about that for a moment.
I'll take that. So the rewards that the user gets from staking their SPA and getting veSPA will be also in SPA. So the rewards will be given to them in SPA. So that way, if they want to, they can go ahead and stake those SPAs again for additional rewards.
Yeah, I think Ray summarized that well. So even when the rewards are generated in a currency different to SPA, such as the minting and redeeming fees of USDS or the yield generated by the USDS, the protocol will convert the stablecoin back to SPA by conducting on-chain buybacks. So stakers will just be receiving rewards in a single token, which is SPA.
Awesome. Thanks, guys. Okay, next question. So does Sperax have plans to integrate with other Arbitrum native protocols by using USDS as a collateral asset, such as GMX or Tracer? Great question. I'll take it as I'm leading the partnership discussions here. So we're actually in intimate talks with both groups, and we already have a partnership solidified with Tracer. So it's a little bit of an alpha drop here, but ideally by the end of Q1, we'll have perpetual products that settle with USDS. So what that means is through the Tracer DAO protocol, a user that has USDS in his or her wallet has the ability to lock that USDS and mint a synthetic Bitcoin, a synthetic Ether, any perpetual product that is listed on Tracer's protocol. They can use USDS to actually mint that, trade it with leverage, and then settle their trade using our stablecoin. So we're super, super excited about that. And we will be launching new farms with TCR and SPA and USDS. So keep a lookout for that. And then when it comes to GMX, so we're talking with them now about getting listed on the GLP product, but we are waiting for the Chainlink price fee in order to make that possible. But in the meantime, what we're doing is talking about seeding trading pairs against USDS in their new AMM product. So I can't give much more information beyond that. But yes, both of those protocols are going to be some of our upcoming announcements when it comes to growth and partnerships. And most importantly, USDS integrations. Okay, next question. Will veSPA holders on Arbitrum be eligible to share fees on USDS minted on the other chains once USDS expands to other networks? Great question.
So that's a good question. It's something that we're tackling. So Nico is following up. This is part of a broader question about support for multi-chain. So we don't have an answer yet. It's something we're working on, but stay tuned. We'll have more on that topic.
Yeah, as Ray said, we are finalizing our multi-chain strategy as we speak. There are a couple of different directions we are considering. One way would be to have all of the minting and redeeming happening within Arbitrum and then just shipping the stable coins across chains. Another direction would be to have the stability mechanism existing in multiple chains at the same time. In any case, the thing we can say with certainty is that veSPA holders will be capturing 100% of the value of USDS growth. That means either on Arbitrum or on other chains. No matter where, if you hold veSPA tokens, with certainty I can say that you will be capturing all the value accrual of USDS, no matter where that value is being generated. It could be in Arbitrum, it could be on Cosmos, it could be on Ethereum. veSPA holders will be capturing all of that value. The exact implementation will be finalized in the next few weeks.
Amazing. Thanks, guys. Next question. Will veSPA be tradable on Dexes or Dexes?
To answer that, no. Tradable tokens, or they are not even transferable tokens. It follows the vote escrow mechanism. Yeah,
Awesome, thank you. So how
Yeah.
would a user get veSPA?
It's pretty simple, really. You just send SPA tokens into the smart contract, and then depending on the lockup period, you will get veSPA tokens back. So the longer you lock up your SPA tokens, the more veSPA you get in return. And yes, as Yash said, veSPA tokens will be by design non-transferable, but that doesn't mean that a synthetic derivative of veSPA could not be created in a similar way like Luna and like P-Luna. But in terms of initial design, we will make it non-transferable. Now, if someone wants to make a derivative product of staked SPA, this is something that could definitely happen down the road. But yeah, when it comes to our design, we thought that we wanted to make veSPA non-tradable on purpose as a way to make sure that that SPA circulating supply gets smaller and smaller over time. So we want to have a direct way to remove tradable SPA from the circulating supply and put them into the non-circulating supply, which is what the veSPA model will do.
Great. So, very shortly, we're going to be transitioning the governance and the upgrade rights from a multi-signature contract over to the DAO, which, the implication of that is that this $1.2 billion or 1.2 billion SPA tokens, which are reserved for the public DAO, which will be vested over the next 4 years, they will, where those tokens end up will be the result of the veSPA votes. So how are we ensuring that the entire treasury isn't going to just go to, say, the pockets of veSPA holders? Great question. And does anyone have any ideas around that?
So we actually want to have most of the emissions going to the veSPA holders for the simple reason that people who choose to lock SPA for a long enough period of time, they tend to be higher quality holders, like they tend to be people who are more loyal to the project. And that's rewarding those people with inflation is a feature, not a bug. So any protocol that wants to have healthy tokenomics should make sure that it rewards users who are the most loyal to the project. So a V model that gives the revenue as well as the inflation to users who choose to stick with a project for a long period of time, I think it's something we strive towards. So yeah, I hope that answers the question.
Yes, absolutely. Thank you. Okay, so there's a question around other incentives outside of the government. I'm not sure what exactly that means. Maybe you mean governance, but we could envision bribing protocols being built on top of this. So if a proposal comes along, a protocol wants to capture some of the SPA emissions, they could actually propose via governance vote that, if the SPA goes to this protocol or this pool, then users will earn both SPA and an additional token. So we do envision protocols being built on top of this mechanism, but from a Sperax protocol perspective, we only have SPA, so we wouldn't be able to dictate in some sort of guaranteed way that some other protocol would provide incentives. We can only control governance proposals ultimately voted on by SPA holders. So we can't speak for other incentives, but we do envision that coming to fruition in the future. Okay, there's a question around security. So maybe Yash, you can answer this one, but there's been some big hacks in the news lately, and it makes this user a little bit wary of putting a lot of stable coins into a product to earn high interest. So how safe is USDS from an investment standpoint? Maybe we could touch on audits and various safety mechanisms we put into the protocol.
Yeah, I think definitely we are trying the best practices as far as the development is concerned. We are getting our contracts audited from time to time, and maybe related to the protocol, I think Ray and Nicolas can add more to it on how we are adding up to the security of the protocols or the USDs.
Yeah, thanks, Yash. Absolutely. Security is paramount for us since we're in the DeFi space. My background is actually in security, so I've been in that space for a long time, and we're instituting best practices in what we're doing, right? So when we before we write a smart contract, we have a specification that outlines exactly the objectives that we're trying to do. We review that as a team so that we have clear understanding throughout the organization of what this smart contract is supposed to do. We really try to vet out as many of the issues as possible before we even write a line of code, because it's, as you know, or if you're familiar with software development, it's far easier to make changes on paper than it is to make changes in code. Then the next process is writing the smart contract. Of course, that goes through a whole process of internal reviews that is vetted through by a team of all the smart contract developers. We hash it out. We try to break it. We try to look into all the possible issues with that. In addition, we also do a battery of test cases. So we're always looking to try to get to 100% code coverage. That's really important. Then the next thing is also to run internal tools. We run, internal tools like Slitter, any kind of fuzzing type of tools that we can add there. That is actually part of our CI/CD pipeline. So every time we check in code, those utilities get run, and so we try to nip any potential issues right at the, before they fester and they get too long. So during the check-in process. And then, of course, at the end, we do a security audit with an external review. I come from an audit background, so I also do, the auditing internally. But the point is, we try to get as much done and covered before we get to the audit stage, because we don't leave it to our auditors to find all the issues. We take that responsibility on ourselves, really paramount. And we're always looking for ways to improve our CI/CD pipeline process and development process. We're looking at tools like Scribble to do formalized specifications. We're looking for additional fuzzing technologies that we can add on to our utility. So that's it.
Awesome. Thank you, Ray. And thank you, Yash. Next question. Allison asks, can you guarantee this token will run according to the existing white paper and roadmap? Yeah, let me talk about this real fast. So the white paper and the roadmap are like what you can think of as like our guiding light, but we're a very pragmatic team, and we're accepting of the fact that this is an extremely nascent industry that's developing rapidly, including both regulation and just technological development. So though that is our guiding light, it is subject to minor tweaks and improvements, basically to respond to the varying market conditions. So we will use it as our foundation and our guiding light, as I've mentioned, but if we have to change a parameter here or there, we'll be very transparent in the process, but I could see that happening. Next question. It's asking about the sustainability of yield farming. So when it comes to like liquidity pools, we have some short-term farms where we're kind of just paying for liquidity. But something that's really important to note here is that the native yield that is offered from or offered to USDS holders is not from SPA or any sort of inflation directly pertaining to Sperax protocol. It's actually an organic yield generated from the collateral that the Sperax protocol owns. So what that means is that the auto yield is sustainable. it is not being financed by SPA inflation. It's not being financed by SPA at all. So that auto yield mechanism comes only from the Curve protocol today, from trading fees plus the CRV incentive. So it is all an organic yield. You don't have to worry about it dying with the hype. Curve isn't going anywhere, and nor is our auto yield. How do you plan to spread awareness in different countries? So, okay, first off, we do have a translator in Discord. So you can actually click on the country flag that you want the message to be translated to, and it will automatically do that. And then in the future, we want to build out communities native to the language, to just different language speakers. So if you want to or have any interest in kind of building that out, you can apply for a grant. We can grant some SPA, and you can own that process. So don't hesitate to reach out. We have lots of opportunities to allow community members to help build out the ecosystem and the community. Okay, next question. So there's a little confusion around veSPA and the stablecoin. So as we've mentioned, the stablecoin is USDs. The governance token is SPA. And the veSPA is simply a staked version of the governance token SPA. And once you stake it, you get really exciting benefits that Nico touched on earlier. This is a general question. So why do we believe that the Sperax stablecoin is better than stablecoin alternatives? And how could it potentially improve global commerce, especially in Southeast Asia?
I can maybe attempt to answer that. So when it comes to USDs design, I think it has some advantages relative to the competition. So first of all, it's a stable coin that operates fully on chain. So unlike USDC or Tether, it doesn't require it doesn't have any external collateral, and soon it won't have a centralized point of failure. So effectively, USDS will be a truly decentralized on-chain stablecoin. Secondly, when it comes to the way USDS is being stabilized, it's one of the few coins in the world that uses a hybrid model, which is to say that it's partially stabilized by external collateral as well as stabilized algorithmically using our own token SPA. The key innovation there is that the reliance of USDS on collateral versus algorithm is dynamic. So when the market is favorable and the stablecoin trades at a premium, the protocol will heavily favor algorithmic stabilization, which will mean that on the upside, SPA burn will be significant. On the other hand, if the market is negative, which can be reflected either with a sudden drop of TVL or the stablecoin losing the peg, then the protocol will become much more collateral based, and the coin will convert. The stablecoin will look much more similar to a stablecoin like DAI, like Terra, rather than Terra on the downside. So effectively, by having this hybrid model, we get all the scalability benefits and unlimited upside, while we limit the downside by making the reliance on external collateral being market dependent. I think by itself that's a huge improvement over existing stablecoin designs. And on top of that, the fact that where a hybrid stablecoin allows us to generate yield on the underlying collateral, and we can pass that yield directly to the stablecoin holder, which I think is a nice benefit that comes organically with our design. So just by holding USDS, you will be able to generate yield, and also you will be able to sleep without stress at night, because you know that your stablecoin will remain stable both by the collateral as well as the algorithm in a dynamic manner. So yeah, in a nutshell, I think these are the main benefits of USDS. And also, since we are on Arbitrum, gas fees are quite low. Now, when it comes to using stablecoins for global e-commerce, there is a sticky point there, which effectively is the fiat on-ramp and fiat off-ramp, and that's pretty tricky. So Chai was a good example of that, the DApp of Terra, and they struggled quite a bit when it comes to convincing merchants to accept crypto rather than fiat. That's a pretty hard goal. But I think if we build a robust product with direct benefits for the end consumer, adoption will slowly come. So I'm pretty confident USDs will be widely adopted in the end. But the path to getting full-scale adoption, especially from traditional merchants, can be a bit rocky sometimes.
Thank you. Next question, and we briefly touched on it, but I'll kind of shed some light on it too. Why did we choose Arbitrum to build Sperax on rather than a layer 2 such as ZK Sync or Matic? Let me briefly touch on that. So it's very important to note that at a technology level, Arbitrum is very different than the zero knowledge mechanism of ZK Sync and the layer 1 approach of Polygon/Matic. And what I mean by that is Arbitrum actually borrows the security guarantees of Ethereum layer 1. And what that means is if there's ever some sort of issue with Arbitrum, meaning that it goes offline for whatever reason, any user can actually still access their assets and move their assets directly on the layer 1 Ethereum blockchain. So in the event that something like the wormhole happens again, which we just observed from the Ethereum to Solana bridge, if that had happened on Arbitrum, users could still get their money. When this happened on the wormhole bridge, the money was gone and users couldn't access it. And also, when Solana goes offline for those couple hours, couple days at a time, users' funds are basically in limbo. That just can't happen with Arbitrum thanks to optimistic rollups. So we chose Arbitrum for that reason. And ZK Sync is actually one of our top priorities when it comes to, what layer 2 are we going to deploy on next. And we're really passionate about ZK Sync because of the zero knowledge attributes. So we want to build digital cash. That's something that we really want to strive toward. And a natural property of cash is anonymity. So being able to build payment applications, saving applications, various financial services under a privacy layer really unlocks some powerful experiences for users and really unlocks a lot of freedoms when it comes to censorship. We're very excited about that. Next question, stablecoin related. Nico already answered that. Mr. Onion, am I correct in assuming that you guys are trying to build something similar to Anchor/Terra Luna on Arbitrum?
Not really, no. I think that's not an accurate understanding of what we're building. So, first of all, Terra is 100% algorithmic stablecoin. This has both pros and cons, but we decided not to go that route. So, first of all, our stablecoin design is fundamentally different to Terra's stablecoin design. And then also the way we generate yield is quite different to the way Anchor generates yield. So if you look closely to the way Anchor yield is being generated, 50% of the yield is from staking rewards. The other 50% is subsidized by Terraform Labs. We actually have a quite different approach when it comes to our yield generating strategy. Our yield is not fixed and comes from external DeFi strategies. So yeah, to conclude, both our stablecoin design as well as our yield generating mechanism are quite different to Terra. I think the space is pretty big. There's no zero sum game when it comes to decentralized stables. So I can see both us and Terra growing in parallel, as well as other decentralized stables as well. I think the decentralized stablecoin market is going to be probably the most promising area within crypto, and I'm excited to be part of it early on.
Yeah, thank you for that. And something I just like kind of pointing out is that different infrastructure design decisions, if you elect to build something on Terra versus building something on Ethereum versus building something on Polygon, it warrants different use cases because of those security guarantees, the different levels, different price points, etc. So there is plenty of room in the market for all of these different decentralized stablecoins to thrive, as Nico mentioned, because really they're targeting different pain points and servicing different customer profiles. So that was actually the last question. So now we'll transition over to Sam. I think he's got a live question. What's up, man?
Hey, how we doing today, guys?
Very well, very well.
Good. Thanks. I'm great. Thanks for being so generous with your time per usual. But I was just curious. I'm reading through like Frax's docs right now, and I noticed that they talk about how when the Frax shares treasury kind of dwindles longer term, they're going to transition to Frax, like the dollar stablecoin they have, as rewards to redirect to the various LP pools. Is that like the similar plan for SPA as the treasury dwindles? Are we moving to USDs? And I'm trying to work out in my head how that's even sustainable, because you think that'd be artificially lowering the collateralization ratio by just minting willy-nilly new Frax, or in this case USDs, and rewarding that to LP pools. So yeah, would love to hear your thoughts there.
So I expect most of the rewards to actually come from the USDS fees as well as the USDS yield. So although we will be subsidizing rewards from the treasury, I expect a bigger chunk of the rewards actually to be non-dilutive. And what we will do is the underlying rewards will be in USDS, but we will be forcing the protocol to do buybacks and reward the final user with SPA. So even if we're not releasing more SPA into the circulation, the protocol will be purchasing SPA using USDS to reward the end user. So yeah, I think to answer your question, I expect the majority of rewards to be non-dilutive, to be non-inflationary, but the end user will receive SPA through the process of buybacks.
Okay, great. That answers my question well. And sorry if you guys already touched on that at the beginning. I was a little bit late getting up here, but I appreciate it.
No worries. All right. Well, I think those are all of the community questions. If anyone else would like to hop up on stage and hang out for a sec and chat, feel free. If not, thank you so much. We'll be here every Wednesday answering community questions and giving updates. Yeah, thank you so much, everyone. And thank you, Nico and Yash, for joining.
Thank you, everyone, for being here.
Thank you, guys.